getting users to bypass all barriers and pour money into the US, into the Nasdaq, slowly taking over global capital markets. If people won't come to America to buy stuff, let them buy America. Hi everyone, today we are diving into a super interesting topic, tokenized US stocks. Kraken just launched its stocks with over 60 US stocks in just a few days. Bybit quickly followed, rolling out tokens for Apple, Tesla, Nvidia and more, and even Robinhood is getting in on it, building their own blockchain to bring stock trading on-chain. So why are all these platforms suddenly racing to launch on-chain US stocks? Is this just another financial innovation, or is the US playing a much bigger game here? On the surface, it looks like just a new small crypto trend, but if you think a couple steps ahead, you'll see it might be part of a self-rescue plan for the US economy, getting users to bypass all barriers and pour money into the US, into the Nasdaq, slowly taking over global capital markets. So stick with me as I break down this tokenized stock craze and uncover the US global money-making plan. If you like what I'm sharing, don't forget to subscribe. You can also join my Telegram. It's in the description right below if you want to go further or discuss. Even more. So tokenized US stocks aren't exactly new. So why didn't they catch on before? A few years back, projects like Synthetics and Mirror tried this. Binance tried this. They used oracles and synthetic assets to peg stocks prices to on-chain tokens. You could use tokens like SNX or UST to over-collateralize and mint stock tokens like mTesla or SIAPL, then trade them on-chain. Sounds cool, right? Infinite liquidity, no slippage, no one sniping your price, just pure algorithmic trading. But here is the catch. Those tokens weren't actual stocks. You didn't own anything, had no voting rights, and forget about dividends and stuff like that. It was basically betting on price swings only, like buying a lottery ticket or a meme coin. Plus, if the oracle messed up or the collateral crashed, the whole system could collapse. Mirror, for example, got wrecked when UST imploded. Worst of all, the money just circulated in the crypto world with no real-world connection. It was not real-world assets, no brokers, no real asset custody. Nobody trusted it for big investments, so it never went mainstream. That first wave fizzled out really fast. But this time, tokenized stocks are blowing up on social media and video platforms, with crypto-tagged stocks soaring. Why? Because the game is totally different now. What's new? What's new about this wave of tokenized stocks? Kraken, Bybit and Robinhood stock tokens aren't just simulations or fake Apple or fake Tesla. They are backed by real custodied stocks. We are talking real-world assets or RWAs. In other words, the token you buy on-chain actually represents a real share of Apple or Nvidia. But the whole process happens on the blockchain. All you need is just a crypto wallet, some USDC or USDTs, and a few minutes of your time to make the trade. No account setup, no ID verification, no KYC, no time restrictions. Just click and buy Apple, Intel or Tesla, no matter where you are in the world. For folks in many countries, especially in the developing world, this is a game changer. Before, buying US stocks meant opening accounts, transferring money, verifying IDs, dealing with KYC and navigating, forex fees. Now, a wallet and some stablecoins, and you are done in minutes. So this isn't just about simplifying the experience or some blockchain, Web3 buzzword. It's about building a global pipeline to funnel money straight into US capital markets. Okay, but why? Why is the US so eager to suck in global cash right now? The answer is pretty straightforward. America's trade deficit is ballooning and the economy is struggling. They need new ways to pull in money. Everyone knows the US have been, in a trade deficit country. Everyone knows the US has been a trade deficit country forever, buying more than it sells. But how it stayed afloat? It's because of a financial account surplus. Basically, the world keeps investing in the US, buying treasury bonds, US stocks, and using dollars for trade. So as long as the world pumps money into America, the US can keep swiping its credit card and living in deficit. But things are getting shaky. The US economy is slowing down and the dollar's status as the world's currency is under fire. Think China's yuan, Eurozone's independence, independent settlements, and BRICS digital currencies coming up. More countries are pulling back from supporting the US dollars, from supporting the US economy. So what's the plan? the US has to actively pull money in, not just wait for it to show up. And this year, they have been trying all sorts of tricks. Tokenized stocks is just the latest. I bet everyone watching has felt these moves in some way. So, if you want to know who is behind this, let's talk about a key player. Donald Trump, of course. He figured out early that the US needs to shake things up. Right after taking office, he went all in on crypto, supporting Bitcoin, launching NFTs, even dropping his own meme coin. He's been all over X, jumping on every trend to grab the crypto crowd's attention. Why? Because he knows a hot crypto market means more stablecoin trading, which keeps the US on-chain dollar pool buzzing because stablecoins are mostly in dollars. But hyping crypto isn't enough. With US treasuries maturing soon, the Treasury Department is under massive pressure. So Trump also pushed tariffs to bring back American manufacturing and boost the spendings. So enter tokenized stocks. A fresh solution, a new solution, another solution. If people won't come to America to buy stuff, let them buy America on-chain where they are. You might not visit the US, but if you are using USDC, USDT, crypto to buy Apple stock every day, that cash is flowing to America. This is the new financial colonization tool, tokenized US stocks. So, how should we think about this as regular folks, regular investors? I see it from two angles. On the plus side, the positive side, this is legit asset equality. Buying US stock, it used to have a ton of barriers. Now, with a wallet, internet, and stablecoins, anyone can own shares in the companies they believe in America's top companies, anytime, anywhere. For people in developing countries, as I was saying, where local currencies might lose value yearly, faster than US dollar, buying US stocks could be the steadiest option. This is financial inclusion in action. As a decentralization advocate, this is the vision I love. Blockchain actually serving regular people, making finance less of an elite game. That's the heart of decentralization. We like that. Freely connecting value, breaking geographic barriers, and enabling fair access for everyone. I love that. But there is a flip side. Tokenized stocks come with risks and controversies. First, let's talk about the regulatory risk. Many countries haven't decided if these on-chain stock tokens count as securities or if they are even legal. Who is in charge if something goes wrong? Without clear rules, a regulatory crackdown could tank this market overnight. Second, there is market risk piling up. Tokenization lets more people buy US stocks, but think about it. All that money is flowing into the US, into US assets, essentially all in on US stocks. It looks like globalization, but it's really risk concentration. If the US market crashes or the dollar falters, the whole world could go down with it. Third, user rights aren't equal. Even with real stock custody, token holders don't get voting rights, dividends, or a seat at shareholder meetings. It's clear this is built to pull in cash, but not to share power with foreigners. And finally, there is pressure on national financial sovereignty. Small countries already worry about capital flight. Now, their young people and investors might skip local banks entirely, using stablecoins to buy US stocks. So no matter how those countries tweak their monetary policies, they can't touch on-chain funds. For some places, this could be tougher than dollar dominance. It's like money sneaking out your window without knocking, and you can't do anything about it. So here is the bottom line. Tokenized US stocks aren't just a short-term hype. They show how the US is using finance and tech to maintain dominance in the crypto world and in the financial global world. For us individual investors, it's a lower barrier tool to tap into strong assets, but as an observer, I've got to point out the bigger picture. This isn't built for you, this isn't built for me. It's about keeping the dollar alive, it's about keeping the power. Geopolitics. Moving forward, whoever controls the narrative around cross-chain money flows will have the upper hand in the next global financial race. That's the real opportunity here for countries. Right, that's it for today's video. That's what I think about that. What do you think about this on-chain US stocks wave? Drop your thoughts in the comments. And if you enjoyed this video, if it made you think, please like, comment, and share. You know the drill. If you think I did a solid job here, hit that subscribe button, turn on the bell, and join me on Telegram. It's in the description. Merci et au revoir.